What's up, guys? It's March 12th, 2025. Yes, had some tradable legs in the market, but for the most part of the day, we were sideways. We had a big up, we sold off, we rallied, big up, big down, big up. That puts us into a trading range. I think trading range was tricky because it was a kind of an expanding triangle. From this swing right here, we have a new high, new low, new high, and then end of the day, sold back off, but didn't make a new low. Daily chart broke out of the EMA, and we're still seeing we've seen continuation for a long time. Leg one, pull back, leg two, pull back, leg three, pull back, leg four. Today's bar broke yesterday's candle high, so it's a trend line break, but it's a trend line break at the low of what could become a trading range. We sold off into here, and now we're starting to go sideways. So we'll see if these two bars get its own leg two, and bears get one tick below the March 11th low, or is this the start of a pullback or sideways price action? We've been trending for a while now on the daily chart, and you can see the lower time frame actually looks more sideways. So we're far away from the EMA. This is the daily EMA, so this EMA is that EMA. This is a 15-minute chart. Where are we? 97. Oh man, we're like 300 points away. We're pretty far away from the EMA. I don't know when the last time we were that far away from the EMA is. 15. So this is today's price action. Gap up, several bear bars in a row, and we can see the leg two here. Leg one, pull back, leg two. This tested yesterday's breakout point, and then we rallied for three legs. Leg one, pull back, leg two, pull back, leg three. Trading range behavior, sideways price action. Although it was trading range behavior, I think these legs were still tradable. You could buy here for leg two of this move up. I think this was a hard sell. I think this leg made the day tough because its leg two was delayed and it was at a new high. So traders may get short around the EMA looking for leg two, end up getting stopped out by a tick, and then it sells off. So that could be annoying. I didn't trade today, but I could just see that happening on if I was to trade. Technically, the correct stop would be above the high of the day. That's a lot of risk. There's a lot of volatility still in the markets. 18-point bar. Okay, that's not the worst. Let's say you get short. So you see the leg one. You might be able to trade that leg, but it's the end of the day. Trade this leg two at the end of the day. So you'd have to hold past. Anyways, gap up, bar one, bull bar. We're above the higher time frame EMA. This is the 45-minute EMA. Above the higher time frame EMA, has more tail than body, so it's a trading range bar. Bar two, same thing, but it's a bear body this time. Bar three, strong bear bar, closing on its low. This is the breakout bar. Reversals are breakouts. The gap up is getting back continuation. We went sideways, and bar three is trying to get its own leg two. Follow through bar four. Bar four is not closing below bar three, so it's bad follow through. And there's a leg two right in there. So leg one, pull back leg two. And then we see bar five. Bar five is breaking bar. So bar four is a fractal leg two. Bar five is a trend line break leg two. So leg one, trend line break leg two. That's met with six. Bad close on six. Bad close on seven. I can see three pushes down. Leg one, pull back leg two, pull back leg three. Bar eight, good bull bar closing on its high. I think that's a good bull trap because of the gap up, and then the tails below 6 and 7 kind of make it look like maybe we rally or we need a double bottom and then we rally, because there is a lot of momentum here that should see something. With this much momentum, I don't think we're just going to rally right away is what I'm trying to say. Bar 9, bear bar, closing on its low, but not closing below bar 8's low. Bar 10, bears start to get bars below the EMA, but bad follow through. Still follow through, but bad follow through. Bar 11, trading range bar, has a bigger body now. Bar 12 is an inside bar. It's a bull bar. It could be acting as a pullback. 3 bear bars in a row is a micro channel. Leg 1, pullback. Leg 2, behavior. Bar 13, I called this one out in the live stream. I was like, hey, bar 13 is pretty nice, but it's testing this high. Let's see what happens with 14, 15. Then we got follow through all the way up to 16. They are a 4-bar bear market channel with gaps now. So now we know bulls are trapped. 17, strong bull bar closing on its high. It's nothing more than a pullback when we see 18, 19, and 20. The question was asked today, are we always in short? I think it was around bar 19 or 20 printed. And I can't remember my exact answer, but I was saying I think the price action was always in short, but I wouldn't sell down here. And that's because we had three visible legs lower. So just count the bull bars. 1, 2, 3. So that means we have at least 3 legs. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4. After we have any legs past leg 2, so like 3, 4s, and 5s, the probability for trend continuation go down. 21 has the same high as bar 20, so it's not necessarily a traditional inside bar, but it's close enough, and in the market, close enough is usually good enough. And this acted at it, so that means it's breakout mode, and it ends up being a really big rally for the bulls. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bull bars in a row. I think on the third bar, if you're still holding short here, okay. You're holding short here, 23, you think it's testing the gap. And you see 25, I think you definitely got to get out, because now bulls have 3 bull bars in a row. That's good enough for its own second leg. Ends up being a really big rally. So you short anywhere here and you don't get out, you're going to be underwater. 27, I counted that as the leg 1, pull back leg 2 from a fractal perspective, and then 30 breaks the trend line. So now that starts the real leg 2. Saying the real leg 2 is that's the wrong verbiage. 30 is a trend line break, so now we can get another leg 2. 31 first the opposite bar, so leg 1, pull back leg 2, pull back leg 3, 37. 34, 30, 32, 33, bull bars closing on their high, but there's more tail on 33, and we're approaching resistance, so the higher time frame EMA. 34, bad follow through. 35 is a bull bar, but there's a tail, and we're around the breakdown point from the previous swing to the low, the previous bear swing. 36, bear bar, but bad close. Is closing above the midpoint, more tail. Something's suspicious. If you're long, you gotta start thinking, wait a minute, 35 closes bad, 36 closes bad. Something's not right. 37, bull bar closing on its high, no follow through. 37, 38. 39, good bear bar closing on its low, strong to get its own second leg. This is a trade I would like to take, but I didn't. A limit order below 38, get filled on 40, meets 1R on 43. Leg 1, pull back leg 2 into the EMA. There's a double bottom. 43, small bar on the EMA. It's a bull bar, but has more trailing range bar. 44, sells off and then rallies, trapping bears, but they did have enough time to scalp out. I don't know. It depends how fast the bears are. I think more bears would be trapped than able to scalp out of bar 45 tail. Or excuse me, I'm going to say 44 tail. Bar 45, same situation, sells off, rallies. So there's 3 legs right there. Leg 1, pull back, leg 2, pull back, leg 3. Then we go sideways, 44, sells off, rallies again. Another leg, this is a pullback, not a leg. Leg 1, pull back, leg 2, 47, closing on its high. 48, another bull bar closing on its high, and it looks like a good continuation. You see 49, I think you have to start getting out of shorts just because of this leg, because of these bars. Excuse me, I said getting out of shorts. I meant to say getting out of longs because of the shorts, because of this leg, because of this leg, because of this leg. If you're along the pier, you're risking a sell-off, and that's actually what happened with 49 to 54. The bars are growing, so it's climactic. When we see a breakout, we want to see orderly bars, kind of like these 3 bars, but even those 3 bars aren't that much the same. They're more the same than these bars. This is climactic, so small, a little bit bigger, big bar. 54, big bear bar closing on its low. 55, we rally, sell off, bull bar closing on in its midpoint, and then 56, we have another inside bar. Inside bars are the only type of bars not breaking out. 57, strong bull bar closing on its high. I think you have to get out because of the type of context we have with the rally, the inside bar, and then this bar closing on its high. I think you have to get out of shorts. 58, follow through for the bulls, closing above 57, but not closing far above the EMA. The EMAs are starting to line up. When the EMAs line up, it's more sideways price action than trending. Where are we? Did I say 58 or 59? Bear bar. It's a doji. So I lost my train of thought when I was saying that. So the EMAs line up. We're going sideways. 57.58. Two bull bars closing, both closing on their high, but bad follow through. 59.60. Barely sold off and then rallied. Good bull bar closing on its high, but it's closing right under the EMA. So I just think this bull trend is not the strongest. 61 bar closing past beyond 60s high, so that's good. That's unlike what was the example I was using earlier? I can't even remember now. Where were we just talking about breakouts not closing? Here. See how I was saying like bar 4 is it's follow through but it's not closing below bar 3. Bar 5 is follow through but not closing below bar 4. Same thing with 6 and 7. Here here we do have bars closing above the prior bar, so that's trending highs, and we have trending lows. 62 sideways price action. 63, 64 third leg 1, pull back leg 2, pull back leg 3. What happens in third leg? Leg 1, pull back leg 2, pull back leg 3. Fractal third leg 1, pull back leg 2, pull back leg 3. That's sideways price action. That's more the probabilities for sideways price action go up. 65 bear bar closing right around the midpoint. I think it's safe to get out of shorts. We're at trading range highs. I think it's safe to get out of longs. We're at trading range highs, and maybe if you want to buy, you can buy again lower, but you'd have to scalp. Obviously, at that moment, what I'm saying this like we don't actually see the price action here. This is how I was talking. Like if you want to stay long, you have to buy lower, but we see the price action. Longs kind of don't work unless you're scalping out. 67 sells off and rallies back above the EMA. Still not good for the bulls, but that tail does show you that bulls were buying low. But then we see 68, 69, 70, and 71. That's all mostly bear bars closing on a low. Bar 70 is a bull bar. It's a trading range bar, so it's not the best bull bar. If you want to buy it, I think you're buying more of a pullback in a bear trend. 72 inside bar. It's getting late in the day. I think it's safe to get out of trades around this time. Not too much happens after 72, and if it does happen, it's a little more random. 72 is also an inside bar. 73 trend line break, looking for leg 2 from bar 71, and they get that leg 2 with 73 and 74. 75, 76, 77 training range bars, bull bodies here, bear body there, and it's just more sideways price action. We've had a big down, big up, big down, big up, big down, big up. So the market's going more sideways. EMAs are lining up. Bears did get 4 bars below the EMA, so that's good for them. We're closing below both EMAs, but look at the higher time frame. This is 3 legs lower, and we're selling here. Doesn't mean we can't keep going down, but we'll see what the month brings us. So we were talking about gaps today, and I was saying this isn't the strongest bear trend because there's not too many gaps. As soon as we started to get gaps, so we have this gap that stayed open. We had this gap, it closed. Then we had these 2 gaps. So like, okay, we started to get bear gaps, but then they closed right away. So like, not good. Zero height gap right here. Could see higher prices. Bears are now getting trapped. Well, they get trapped on the gap. So they have the limit order bears here are getting trapped here. And then it rallies. We have more. That's an interesting place how there's a gap here where there's a gap there. Rallies on trading range days, gaps get closed. That's a good way to read context. If we're trending, so when we were trending, this gap was open, and then as the gaps start to close, here, you can think trading range. Okay. Then we have a few bear gaps open here, but they get closed right away. Again, trading range behavior. So that's one way I really use how to read the context if we're trending or not, is if gaps are getting closed. Here's a bear leg. Let's see if 1-to-1 is not met. We go bodies. That's met. Or you could do a breakout. Yeah, if even did the breakout wouldn't be met either. So there's a 1-to-1 there of the bodies from 3 to 7. And then we have another 3 bars here. I like this one. 3 bars, short the high of bar 12, maybe short the low, maybe short bar 13, and you go for 1-to-1. That's met pretty quick. Maybe short 13 and go for 1-to-1 as well. I think there's a lot of scalps today. Trading range days typically have more scalping than swinging. You might see this and go for a swing, but once you start to see 39, 42, and definitely this, you got to think the swing's not happening. Get out. there's obviously measured moves all the way up here. You could go for 1-to-1 of any bar. I'd wait for at least a couple closes above the EMA before you get short, because we are in a bear regime. You see 30, 30, and 31 first pullback. So you buy the high of 33 and you barely get 1-to-1 with bar 39. And it actually takes a long time. There's more sideways price action than just trending. So if you're gonna buy the first pullback, you want to see it go bam, bam, bam. Here, you buy the high here, you buy the low there. It's 2 trending bars and more sideways price action. That's 4 bars. Hard to do a measured move here because we get stopped out, but let's say we go for a measured move here. We short here, 1-to-1's not met. Put up the pullback. 1-to-1 will be met if we put up the high of the pullback, but I don't think any of us are shorting here. That's just where I'm measuring from. If you caught that short, it would be based off somewhere here. This leg 2 rallies to around here. There's going to be sellers sitting on bar 3, the high of bar 3. There's going to be buyers sitting on the low of this rally. Today was a little bit quicker, guys. Hope you guys had a good one. Hope you guys are trading well. Hope these videos are helping you. Thank you for tuning in. I always appreciate your support, and I will talk to you guys tomorrow. Thank you, everyone. If you learned something, share the show. Don't be a hoe. See you then. Bye.